Inventory just hit its highest level since pre-pandemic, and sales are cooling. Prices are shifting, especially for apartments and row homes. Here's the big picture. In September, sales were at 1,720, down 14% from last year. New listings were 3,782, up 3%. Inventory, 6,916 homes, up 36% year over year. The sales to new listing ratio was 45% higher, signaling a more balanced market. Months of supply was at 4.02, the highest since early 2020. Citywide benchmark price was 572,800, down 4% year over year. Compare that to last September, when months of supply was at 2.5 and inventory was at 5,000, and the benchmark pricing was at 597,000. Clearly, things have shifted. Now let's look what that means for each style of home. For the single-family homes, detached sales were 859, down 9%. New listings rose to 6% at 1,905. Inventory hit 3,201 units, up 38%. That put months of supply for single-family homes at 3.73. The detached benchmark price is 749,900, down just 1% from last year. From the spring peak, the biggest declines were in the northeast and east part of Calgary, over 6%. Year over year, northeast is down 5.7% and the east is down 4.2%, while the city center still is up 1%. Detached homes are holding its value better than any other property types, but conditions are softening. Semi-detached sales were 156, down 14%. New listings jumped 21% to 361. Inventory rose to 617, up 63%. That leaves months of supply at 3.96. The semi-detached benchmark pricing is 684,800, which is actually up 1% year over year and at about a 3.4% higher year to date. This is the only property still showing positive annual growth, led by gains in the city center. Still, the inventory climbing, sellers need to stay realistic. The semi-detached benchmark pricing is 684,800, which is actually up 1% year over year and has about 3.4% increase year to date. This is the only property still showing positive annual growth, but led by gains in the city center. Inventory is still climbing and sellers need to remain realistic. Row home sales were 304, down 19%, and new listings fell slightly to 592. Inventory rose to 1,099, up 46%. That put months of supply at 3.62. The row benchmark is 437,100, down 4.8% year over year. Prices have been trending down since the spring, and the Northeast is seeing the steepest adjustments. More supply and competition and new builds are creating price pressure in this area. Apartment sales were 401, down 20%. New listings dropped to 924, down 7%. Inventory climbed to just nearly 2,000, up 23%. That gives us 4.99 months of supply, the first time we've been this high since 2021. The apartment benchmark pricing is 322,900, down 6.4% year over year. With the Northeast leading the declines, City Center is seeing more stability. With rental supply and more selections on the market, buyers and investors have less urgency. So what does this mean for you as a buyer? More listings means more options and less bidding wars. Semi-detached homes and single-family homes are still remaining stable, but allow some room for negotiation. Row homes and apartments are where we're seeing the most inventory, so it allows you to have the most leverage. And what about for sellers? Price for today's market, not last spring. And for semi-detached and detached homes, they still will sell. But you have to price accordingly and present them properly. For row homes and apartments, expect longer days on market and some tougher negotiations. This time last year, we saw 28 days on market. Now we're sitting at 42 days. As we head into the winter months, expect fewer new listings, but elevated inventory levels higher than we've seen in previous years. That means balanced to slightly more buyer-leaning conditions as we go through winter. Row and apartment prices may see further softening, while semi-detached and detached homes may hold steady or slightly drift a bit lower. For buyers, winter often brings motivated sellers, especially for vacant or builder inventory. For sellers, consider a pre-inspection or sharper pricing. For buyers, winter often brings motivated sellers, especially for vacant or builder inventory. For sellers, consider pre-inspection or sharper pricing. Looking into 2026, if inventory remains at 20 to 30% above long-term norms, we'll likely see continued downward pressure in apartment and row-style homes, detached and semi-detached staying more range-bound, ongoing district differences between the north and northeast under the most pressure, while city center and the west remain firm. If the sales to new listing ratios can climb back to 50%, that would stabilize prices faster. But for now, balance remains the theme. So to recap, the inventory is up 36% year over year. Months of supply is at 4. Balance for the first time in years. Prices are down 4%, led by apartments and row-style homes, while semi-detached and detached homes remain firm. This is one of the most balanced markets Calgary has seen in years, with buyers having the ability to negotiate and sellers can still sell well with the right strategy. If you'd like a personalized breakdown for your community or price point, then don't hesitate to reach out. I would be more than happy to put that together for you. And of course, you can book a call, click a link in the bio. Thanks for watching.